and inflation's north of 6%. So I'm losing, over 6% worth of buying power in 12 months. That's a horrible situation. I really believe this, and I've said it multiple times. Over the next decade, crypto and blockchain and these technologies will end up being the 12th sector of the S&P.
Welcome to Dream Richer. Today, Kevin O'Leary, also called Mr. Wonderful, gives his prediction on where crypto is headed and where he sees the current recession going. By the end of this video, he also gives his exact portfolio, which he believes is the best investment strategy to follow in times of recession. As Mr. Wonderful argues, inflation rates of today have never been seen before. Even though some may argue that inflation of 7% as seen today also existed back in 1982. Even though that may be the truth, but the 7% inflation rate we see today is far different than the inflation's rates in 1982. Back in 1982, the Fed was still targeting the money supply, causing interest rates to fluctuate unpredictably. Today, it largely ignores the money supply, which expanded dramatically as the Fed bought bonds to hold down long-term interest rates. Its main policy target, the federal funds rate, is close to zero. In fact, the Feds today have completely ignored the concept of money supply altogether, printing $4 trillion in January 2020 alone, and printing extra $20 trillion in October 2021. It's a well-known fact by now that 80% of all US dollars in existence were printed in the last 22 months. This means that the inflation rates today are largely based on the devaluation of the currency, unlike what we saw back in 1982. If you liked the video, then don't forget to subscribe. Let's get right into it.
It's a very interesting dynamic. I'm not sure I can agree with him on timing of the recession because right now the Fed is going to be very, very timid. There was discussion on this first rate hike that it was going to be 50 basis points. We now know with certainty it's going to be 25. And then I think they're going to wait and see what happens here because, one of the reasons you raise rates is you're trying to slow down demand. But when you have not hyperinflation, but very strong inflation in energy and food, you are starting to reduce demand because people are paying $120 to fill up their pickup trucks in America. That's unheard of for decades. And so that will put some kind of damper on it and may, on the other hand, slow down the Fed's rate increases. The idea that they do 6 in a year, I don't think so. I also don't think that, it's going to be very material. Maybe they raise rates to 150 basis points in historical rates. That's not that much. No. And yet the fundamental economy is quite strong right now. So usually when you have rapid increases in Fed rate hikes, you do end up in a recession. When you have very high sustained oil prices, you end up in a recession. But I think because we simply don't know the outcome of the reason that the oil prices are high, and that's Ukraine, we don't know yet what that's going to look like. So I'm a little more optimistic than most predictions, but that's what the market is. It's people making their own decisions every day in terms of where they think. I'm still very constructive on equities. I've bought more recently, and I'm trying to average down, and we'll just see what happens. But there's lots of good companies in the S&P that have pricing power in inflationary times, and I own those, and it's an index called OUSA. So, I'm just deploying capital, taking advantage of volatility, and staying long, trying to put that 30% cash to work, because right now I'm only getting 22 basis points of interest, and inflation's north of 6%, so I'm losing over 6% worth of buying power in 12 months. That's a horrible situation. There are some areas that I'm very interested in: centralized, decentralized finance. I've recently made investments in WonderFi, a Canadian listed company where the regulator allows it to be listed. It just bought an asset called BitBuy, which was the first license ever granted to a dealer broker attached to a crypto exchange. Again, a Canadian asset because the regulator allowed it there. And there's other countries that are more advanced than the US, so I have to invest in those countries: United Arab Emirates, Switzerland, France, Germany, England. They have more liberal policies on crypto, and Canada is one of the most liberal, allowing for these new crypto exchanges, so I invest there. Also, Mutable Holdings, a new company that you'll hear about soon. They own NFT.com. I'm very interested in the NFT space. We can talk about Bitcoin mining. I've got some projects in northern Norway.
Wow.
In the words of Kevin O'Leary, rapid increases in Fed rate hikes are sure to plunge the economy into a recession. Despite the downfall of the US fiat currency, Mr. Wonderful argues that the future has never looked better for cryptocurrency. He goes as far as to say that we could see crypto become the 12th sector of the S&P 500. We've seen Bitcoin hit multiple new all-time high prices over the past year, followed by big drops, and more institutional buy-in from major companies. Ethereum, the second biggest cryptocurrency, notched its own new all-time high late last year as well. U.S. government officials and the Biden administration have increasingly expressed interest in new regulations for cryptocurrency. All the while, people's interest in crypto has skyrocketed. It's a hot topic not only among investors, but in popular culture too, thanks to everyone from long-standing investors like Elon Musk to that kid from your high school on Facebook. As Mr. Wonderful argues, it's only a matter of time before we see crypto skyrocket like never before.
Now, crypto, is this a 20% sector for you, or do you lump this in with tech?
No, I did end up recently at 20%. I have taken some big positions. I've invested in various, the thing to understand about crypto, and I try, and when I talk to, in fact, when I spoke to the Senate last week, I spoke in this fashion. They're very fortunate to be invited there to a bipartisan committee to talk about policy on crypto. And here's what I said, and I believe this. Bitcoin is not a coin, it's software. Ethereum is not a blockchain, it's software. These are software projects written by coders, and they develop these technologies for enhancing economic value. And you have to make your own decision on which ones you want to invest in. I'm very fortunate I get to see most of these projects very early on. I'm a well-known investor in crypto. I get invited into these rounds, and most of the time I participate. And so I look at it that way. But again, I am applying the rule, and I really believe this, and I've said it multiple times. Over the next decade, crypto and blockchain and these technologies will end up being the 12th sector of the S&P. I'm going to own up to 20% in crypto, and in fact, I do now, and I have no more than 5% weighting in any blockchain like Ethereum or Bitcoin or Polygon or HBAR or Helium, some of the ones I own, Avalanche, Serum, all of these different projects, which, it's very fortunate that I'm able to meet these developers. And what's fantastic about them, these are the hottest hands over keyboards around the world. I mean, these are the smartest developers that are coming out of computer engineering and, working on these projects because they want to. And they're young, in their 20s in some cases, and building remarkably valuable technologies. The sectors that I have full weighting in healthcare, 20%, I'm very, very optimistic what happens there. There's been a lot of value created there, and biotech's getting beaten up, so I've bought some more of those as well. Moderna is a big holding of mine and recently averaged down. And so a lot of these opportunities have been presented because of volatility, but you got to think ahead that the sectors that you want to overweight, or at least have 20% weightings in, are ones that are going to be absolutely necessary in the next 3 years. And healthcare is definitely one of those. Infrastructure, very interesting, because you've got $1 trillion bill that's going to be spent, no question about that. And some of these areas that in technology that have been really beaten up, that I've decided to bring their weighting back up to 20%. And I've started to buy into real estate again, but not commercial real estate, residential real estate. I've been very active in the Miami market. I've been watching this market now for 6 years. I've continued to invest in it. Residential has been very strong. Rents have been very strong. The condominium market, the multifamily, all very strong, and I'm putting more dollars to work there. I live here, so I'm very into the concept of local, but I'm also very aware of which pockets are advancing faster than others. And in this city, we have a really progressive mayor, in the sense that is making it very easy for technology companies to come here. Taxes are very attractive. Most of the investment I'm making in real estate are in Texas and in Florida, and removing assets out of, I won't call them they are inefficient states, Massachusetts and New York and New Jersey. It's just brutal to see how inefficiently they're operated and how high their taxes are. And there's a competition between states.
Yeah.
But inflation right now, some portion of it may be temporary, not all of it, but certainly energy prices. The reason you don't see a lot of oil companies saying they're going to change their CapEx percentages, they've seen this movie before. You get a big spike in oil because of a geopolitical event like the one we're having now, and then all of a sudden, a lot of it comes on the market and prices collapse again. So they've been in the penalty box, oil companies, for decades as they lost so much money overextending themselves on development, and now they're more balanced and their mandates are more about return of capital to shareholders. Yeah. And so, that's one of the reasons Buffett made another big investment recently in oil, and I think he believes that it's going to be run with more adult supervision and give a decent return. But at the same time, it's volatile, and so at the end of the day, I like business models that have a little less volatility, where I'm not really betting on the price of a commodity. Yeah. And, that's one of the issues you've got with energy.
It's clear from Mr. Wonderful's take on the recession that the best investment strategy is diversification. This means holding assets across crypto, real estate, and stocks to reduce your loss risk as low as possible. Diversification is a strategy Warren Buffett has promoted many times. In one of his famous quotes, Mr. Buffett states, "Never place all your eggs in one basket," meaning it's always best to have your investments into different assets. To achieve a diversified portfolio, look for asset classes that have low or negative correlations so that if one moves down, the other tends to counteract it. This is especially true if the securities or assets held are not closely correlated with one another. Mathematically, diversification reduces the portfolio's overall risk without sacrificing its expected return. But remember, diversification can backfire as well and hurt your portfolio if you choose the wrong assets to diversify in. This is why doing your own research and making calculated decisions is very important, so you are not simply gambling your money away. Do you agree with this strategy? Let us know in comments below. See you in the next video.